There is nothing more awe-inspiring, something to help space you out, take you out of the moment than the James Webb Space Telescope. And looking at the recent photos, it is an ever reminder that I'm just a meat puppet hurtling through space-time on a rock as I kind of dive down into the fact that I could have bought a Honda Civic here for around $30,000. I could have chartered a private flight from Toronto to Edmonton for around $32,000. I mean, I could right now be living on a cruise ship for an entire year with dozens of ports around the world for around $30,000, because all of this is how much my portfolio has dropped this year from peak to trough. We were up about 4 or 5%, and now we're down about 4%. So I've literally dropped about 30K, and it has led me to enact my stock market emergency fund as I now start buying a lot more aggressively into stocks where I think there are deals. And that's what we have to break down today, folks, as we take a look at the Canadian markets with the recent interest rate cuts. We're going to talk about the tariff war, what is going on in the US markets over the week as we review all the stocks in my portfolio just to see where things sit, how I feel, and what you guys are dealing with. So if you are on a path to financial independence, if you damn well one day want to retire early, just join me, damn it. Hit that subscribe button, and we'll come back to the overall portfolio review in a moment. But this week has been fascinating because you can no longer hide out in SCHD. The Dow Jones, the dividend stocks, they're all getting absolutely slaughtered this week. The only stocks with some exception here are Berkshire's. Shockingly enough, Berkshire's up like 13% this year as people are probably trying to hide out in the more securitized stocks, the place where cash is just huge amounts, piles and piles of cash. So Berkshire has crushed it this year. Even Nvidia now on the week coming back just a little bit, but overall, I mean, Tesla's down 5%, Apple, all these stocks, right? Absolute calamity. And Tesla, you know, they poor Elon. I mean, the guy's gotten so involved in global politics, the boycotting around the world is devastating to the point where they had to get the president to do a car ad. And I got to give credit to whoever made this on TikTok because it had me gutting myself. And I'll show you the intro because it's just hilarious.
I love Tesla. You know, I like to drive cars, but I'm not allowed to.
One of the most awkward, weird things I think we've seen this week is now Australia has been added to the list of countries where Tesla sales are sliding by 71% over the February figures. And we're kind of in the midst of a quarter, right? Like this whole tariff thing started in January. We don't actually get to see the effects on the economy, on stocks until the quarter ends and we start to see earnings and the figures, especially around Tesla car sale numbers. And we've even seen the likes of the old Waymo CEO, Google's self-driving taxi network, come out and say there are many ways to fake a robo taxi service as Tesla's looking to gear up and launch theirs come June. And the ex-Waymo CEO was saying the car is highly inefficient for comfort, being a coupe, all this stuff about, it's not exactly robo-taxi ready. I don't know how they're going to do it in June, but time will truly tell as the criticism continues to mount for Tesla. But the valuation on Tesla still remains high as the bulls seem to trying to be holding on as we just kind of remove the froth, the speculators that really jumped in on the Trump inauguration. And that's kind of the bubble we've seen burst. All the high flyers that came in on the inauguration are now retracing a lot, whether that be your Nvidias of the world, your Palantirs, a lot of those stocks, right? On the other spectrum, though, I do want to point out, I think there's still a lot of room to pull back because the mega uplifting stocks are the highest of values, right? Your Apples, your Microsofts, the ones that are literally pulling up the whole market valuation because somehow Apple still trades at a 3 trillion 33 PE value and it's really not down that much, 12% on the year for a valuation like this. I mean, I could easily see it slide still another 10 or 20%, which is pretty harsh, but you have to keep in mind, guys, if we compare it to Google, a stock that is pulled down, I mean, a lot more, almost 20%, which is crazy to think from peak to trough. Alphabet's down 20%. From peak to trough, how much is Apple down on the year here? Yeah, only like 13%. But when we look at the comparable values, because Google's trading at a PE of 21, almost like literally a 30% less valuation, look at the growth difference because Apple, this is Apple's revenue numbers. It hasn't grown at all. It's growing single digits, if at all. If we take a look at the net income numbers, Apple is seeing flat net income, flat revenue growth, trading at multiples that should be commanding absolutely absurd growth. Because even Nvidia is starting to trade at closer values to Apple now. But look at it comparable to Google, right? Google's still growing at a double-digit clip here, generating $350 billion in total revenues on the trailing 12. If we take a look at the trailing 12 for Apple, it's generating about 395. They're not too far off, but you will realize that right now, Google's actually generating more net income. This is why I'm saying that Google generating about $100 billion is just above Apple's trailing 12-month net income. And how is it not bigger than Apple? So I will say, between the wife and I, this has been one of the largest single stock positions we have been building out. And I actually did buy some more Google today in my tax-free savings account. Within my account, excluding the wife's account, I mean, I'm holding something like about $20,000 worth of the position as of this moment. It's about 5.5% of my portfolio, and I'm very, very comfortable with this. Obviously, we're going to see the April, monopoly fine lawsuit continue to come through. We talked about in my video yesterday, but I'm sitting here sleeping easy at night knowing that I could see this stock probably drop down into the teens from a price to earnings multiple, but even at a 21 PE today, I think is favorable. A lot of people are saying it's fair valued, but I think it's actually undervalued if you take into consideration the future growth prospects that aren't priced into this stock at all, whether it be genomics, whether it be self-driving, quantum computing. None of that is priced at the current value if we just look at the considerable growth that the company is experiencing today. One of the most underappreciated stocks. We just got to get through that lawsuit. So let's talk about the Canadian side of the border, and we'll talk about some of the ETFs and stocks that I bought. But mostly we've seen a huge recovery, basically in energy this week. We've also seen the utilities continue to perform pretty well after talking about them through the week, but everything else has been pulling back the Canadian markets. And people aren't really sure how to take the recent interest rate cut, because now we're down to about 2.75%. As Tiff Macklin, the Bank of Canada head, I think is in a race between tariffs, trying to stimulate the economy and make sure all these mortgage renewals that come up don't get absolutely devastated. So this should start easing some of the bank concerns as well about loan loss provisions, and it's likely we're going to see multiple cuts still this year. Canada is on track to get back down probably to the 2% range, which is going to help me out a lot when my mortgage renewal comes up next year, because I told you guys my mortgage is capped in at like 5.8%, and it's going to be crazy to see what it's like when we actually get to renew it, considering we've been making the massive every single year over our 3-year term. The extra 15% payments were allowed. So our mortgage is going to be cut in half from the extra 15% we're making. Plus, if we do decide to renew rather than paying it off, our interest rate should drop substantially. So it's going to be interesting to see how all this plays into my personal mortgage. But outside of that, with the rest of the Canadian stocks I hold, like VDY, holding up much better, surprisingly, than the S&P 500. Now, I'm only down about 2% this year on VDY, and I'm shocked because, with the tariff war that should put Canada into a recession if any of that gets fully enacted, I'm shocked that, we're still holding up better than the S&P 500, right, which is down about 4% on the year. And we could kind of say the same thing about TELUS, right? Like, a lot of people have been crapping on TELUS pretty relentlessly, but presuming TELUS is guiding correctly and there's not so much more volatility in their bottom line business, I don't know why people are heavily bearish on the telecom space anymore. I think it's priced in that correction. I think we're seeing a bottom now. We could flatline for a while until some of those fears get alleviated over the couple quarters coming, as TELUS hopefully proves out that, with all the price fluctuations, that this is stable. It's not going to be affected by tariffs. And I'm holding my position strongly. I'm not adding to it, right? What I have been adding to, however, is XEQT. As I told you guys, I am looking at scaling this position over time. Right now, it is very small. We're buying it in my wife's account with some of her contribution room. I'm buying it with my recent tax refund and my RRSP, and I'm just trying to level off, looking into continued wealth preservation. Right now, I think my portfolio is still geared toward growth and income, because again, I hold a lot of individual stocks. So does the wife with Meta. They make up about 20% of our portfolio. The S&P as something I also consider a growth ETF. It's one of the largest positions. And then we just have some income with VDY and SCHD. But the growth that we should be able to get off these individual stocks should be substantial enough that I could take profits, especially with something like Take-Two Interactive. Whether this works out or not, I've mentioned that the 30 grand I have sitting in here eventually the next year is going to get pivoted into XEQT. XEQT, I think, is one of these like end all be all hold, ETFs that everyone should be buying to avoid any major pain in their portfolios. And it's something that I think a lot of people have a hard time kind of wrapping their heads around, especially buying the tops, or if you've been buying in the market anytime within the last like 6 months, you're starting to feel pain that I think investors have forgotten can happen, because the last time we had like a 1-year sell-off was about this period here, and people were scared. But now that we've had like 3 years of straight up to the right, people have gotten so confident, and I've seen comments that are quite concerning to me. And I thought this was like a spam comment because it had so many replies, but it's really nice to see the community standing up and fighting for what is right. Because just a guy basically said, every stock and ETF that I have purchased over the last month has lost value. I'm seriously asking myself if I'm just plain dumb or stupid for buying. And the fact of the matter is nobody knows what happens tomorrow. If you think you can speculate on what happens tomorrow, the next 6 months to 1 year, Join the financial clown club. Join the finfluencer world on YouTube, where we all make predictions and analyze dumb things that are likely never going to happen or come true. That's why we cost average into broader markets, and I make some speculative trades with a very small part of my portfolio. But a lot of people said, you're fine, just dollar cost average. Exactly. Keep a stock market emergency fund. So if the stock market dips, you can double up your contributions. Bro, that is psychological. Not all the time it goes up. Take the dividend, dollar cost average, and smile. You only take a loss when you sell. If you picked up quality proven long-term equities and funds, this will just be a blip. As long as a long-term buy and hold investor, this current drop does not bother me at all. In fact, I get excited. The psychological reality of investing is if you want to get rich, you sound like a new investor, so you need to really kind of get into the mindset of being excited when stocks go down. Imagine walking into a Lambo dealership and they were going to sell you a Lambo at 20% off, 10% off. I mean, imagine walking to a store, anything that you like, and now there's a 10% discount and you have money to buy and you're like, hey, I still have a job. I could buy this today at a discount. That's why you need to be excited, right? Because I said, I replied and said, if your time horizon is only a month, like you're looking to buy real estate in a month or a year, you shouldn't be putting it in the market because, your money shouldn't be in the stock market. Come back to me in 10 or 20 years and we can discuss, right? Because nobody knows what happens. I don't think a time horizon should be anywhere within a year. You always need to be looking at a 3 to 5 year time horizon on any stocks that you're buying at minimum, right? So I really appreciate you guys in the community just standing up and recognizing this for what it is. Don't get detoured when stocks go down, but if you are detoured, it might mean that, you're putting your money too much in risky assets, or the volatility isn't something you can handle. And if you're younger, you're going to be able to figure out what your risk tolerance is, your emotional stability through this, and you can adjust into certain investments based off that. Maybe you want to go more into treasuries or fixed assets or things that kind of alleviate some of the volatility and look at broader ETFs like XEQT, of course, or maybe low volatility ETFs like the one BMO offers if you can't handle or stomach kind of the moves that like Alphabet is making, for example. These speculative plays, anytime you buy an individual stock is a speculative play, and you have to take it and consider as much that these stocks and even the S&P at any time can drop as low as 40%. At any time, it will most likely happen in your lifetime where you could see a 20 to 40% correction. And I've been through it now recently with the pandemic and the 2022 kind of, crash that we've experienced. There's been a lot of things that I've personally lived through, and that's how I got rich. I mean, in 2020 was the period where I think we made the most god-awful amount of money that allowed us to purchase a condo in Toronto, was because we got excited when the market dropped significantly. And luckily the wife had some cash. I was able to stir up some cash and we just bought and just kept buying, and it worked out substantially. So get excited when there is blood on the street. Other than that though, however, the other stocks that again, I have been looking, I'm not really buying SEHD right here. I'm kind of taking the dividend and probably going to put it in XEQT. I did buy some more Aduro on the year. We talked about yesterday as well. I picked up another, I think 100 shares of it or so. Just to kind of pick it up while it's down right around that $5 mark. And those were the stocks that I've kind of accumulated. I didn't get too crazy because again, I had a decent $4,000 refund from doing taxes that did help, and I'm still looking at investing more, and I do have a bit more cash on the side. Nothing crazy, but I gotta wait till my next paycheck. But otherwise, I'm hoping the market drops a lot more, to be honest, between now and next week. I don't know if it's gonna happen, but we'll see how the tariff war continues to stir things up. But we're getting big dividends this month too, right? So I'm very excited because I should point out, I think VOO, SCHD, a lot of these stocks are paying out their quarterly dividend in March. So crossing my fingers, looking forward to buy some more, but I'd love to know what you're buying in that comment section below.